Hello, hello. Happy New Year, Simon. How are you doing? Hey, Fabio. Hope you're well. Oops, let me just do that. I am guessing that everyone hears me okay. Hey, Bob. Happy New Year. Happy New Year to everyone else as well. How are you all doing? Good, good. Very nice to see all of you here. First webinar for 2023 for IC Markets and for myself as well. So back, recharged, ready to go. Are you guys trading right now? I am. I just closed out a trade. Dollar just shot up out of nowhere as the markets reopened. So I was super happy about that. Caught a good trade there. Analyzing it for now. Hey, don't analyze it anymore. It's time for some trading psychology session. Hey, Sadia, how you doing? I hope you all had a fantastic Christmas, a happy New Year's Eve party, and I'm looking forward to 2023. I'll give it a minute or two before we get going. Hey, Clinton. I haven't been trading too much. I have just been on some days about one trade a day. Especially as markets were very quiet over the Christmas and New Year's period. But I think it looks like volatility and liquidity is back with a bang. So looking forward to that. What about everyone else? I see a lot of other members joining us today. So welcome again. If you're new to the session, welcome. Let's make it a habit for this year to join this webinars. Help you guide you through the markets, build your skill sets. The guys that move the market are baking from vacation. Yeah, probably. Hey Zoran, how you doing? One more minute and we shall get started. If you're new to the session, drop a message, say hi. We do have a whole bunch of regulars here. Very happy to see everyone. I have gone missing for a couple of weeks. I was taking a end of the year break. So fully recharged. I was away out of the country for a couple of days. Anyone went anywhere interesting over the holiday period? I developed a bit of a cough again, or rather the cough never left. Alrighty. Let's get started. Again, welcome everyone. 2023, 3rd of Jan, first webinar for myself, first webinar on IC markets. Today we're going through trading psychology. All right. As you know, we will be having webinars through the year, and most of the time the webinars through the year are about market analysis or about using a new indicator or a new strategy. This is actually one of the most important things. That's why we're doing it right up the front, is trading psychology. It's not so much about the strategy or the indicator that you actually use, right? It's more about what you do, what you think about when you approach the markets on a daily basis or every time you turn on your computer. So, the common saying is that strategy is that 40% to your success, but psychology is that 60% to your success. So highly crucial, very important topic to get through today. All right. Hey, Jamilu, how are you doing? Okay, as usual, if you do have any questions at any point in time, please feel free to put it into the chat. You have said hi already, so put it into the chat. Let me know at any point in time if you have any questions. Or, because of the topic today, if you have any, not so much questions, but experience that you'd like to share, or situations that you've come across and you'd like me to give you my points of view on how better to address it or how better to approach those situations, let me know. I'll be happy to guide you through that as well. Okay, so we're looking forward to guiding you through this year, your trading year, and to help you trade better, trade more profitably, and more consistently. With that said, a quick disclaimer. Any information contained in this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. Well, what it means is that I might be sharing with you some thoughts and ideas. In this case, not so much about the markets, but approaching the markets and how to trade. Um, do make sure you test it out, on a demo account first or smaller trading account first before you start applying it onto your live trading account. All right, do your own due diligence before you start trading onto your own live account. I know that markets are quite volatile right now. I was just looking at it before we started the session. So, pay some attention here and then we can check back onto the charts later on as well. Okay, good to start. Hey, Zoran. Hey, Georgie, how are you doing? All the best to everyone. So a couple of things to get through today in terms of trading psychology and the best practices. First off, what is trading psychology? Okay, what is trading psychology? Why is trading psychology important? I think that's quite straightforward. We all know why, but I'll get through a little bit of that. Revenge trading and how to overcome it. Now, with that third point, before we get to that, put it into the chat. Let me know and be honest here. Have you come across a situation where you have got into a revenge trading problem, right? A bit of a problem with revenge trading. Is that a problem for you? Is that something you have come across? Hey, Simon, I'm not sure what happened to the dollar, or rather, it's finally moving according to what we expected or we're looking forward to, we've been waiting for. I think that it's just a lot of buying opportunities as everyone comes out of a break, right? So I'm watching it. It might be short term, but just be extra careful if you're looking to trade into that dollar strength right now. Assuming there's a question, any questions for funding forex broker? For funding forex broker, well, IC markets, right? Up in the dollar. Happy New Year, Luca. How are you doing? Well, see, everyone else who hasn't replied about revenge trading, I'm pretty sure that you have. Revenge trading, is not uncommon. It's a quite a common situation that most people will come across. It's only to what extent, right? It's only to what extent. Some traders I know have done revenge trading and ended up blowing their account. I know traders who have done revenge trading and succeeded and made it, recovered potential losses, right? So it's revenge trading and how to overcome it, what to break out of that mindset, right? What happens when anyone gets into revenge trading is that they fall into that slippery slope, and some people call it a tilt. They get tilted. So how to break out of that situation, I'll share that with you shortly. Sometimes I have Martin go from not accepting loss. That is very dangerous, Fabio. It can work out, but it is quite dangerous. Sumit, we're not so much looking at analysis in terms of the euro, the pound, or the pound yen. Today we're going through the trading psychology material. All right. And then we'll look at setting targets. All right, is it reasonable? Is it reasonable to set targets for your trades? Daily, weekly, monthly targets? Should you set a target? Is it reasonable to set a target? And lastly, do you have a trading plan? I'll even go to the point of maybe guiding you a little bit on how to develop that trading plan as well. Okay, so again, a lot of things to get through today. Do make sure that you ask me questions if you come across any points that you like further clarifications on. As usual, introducing your host, myself. My name is Jin Dao. Most of you know me as Jin. I know everyone here by name already as well. I'm one of the investment analysts here at the Everest Fortune Group, award-winning research team, technical analyst award finalist for best FX and equity research for 2019, 2020, and 2021. I have previously managed a multi-million dollar FX fund, and I'm here to help you. I've been trading for more than 15 years now already, so I'm here to help you with your trading journey. Do make use. Ask me questions. I'll be happy. Ask me trading related questions. I'll be happy to guide you through all that. Okay. So, what is trading psychology? Put into the chat. What do you think? What do you think is really? What do you really think is trading psychology? You guys know I like it to be a bit more interactive, so you have to put it into the chat. Emotions. Where do you think that trading psychology comes in more at the before you enter a trade, while you're in a trade, or when you've closed out a trade? It's a state of mind for trading through thoughts and behavior, discipline in markets. Very good. All of it. Anderson said all of it. Very good. Agreed. Okay. So, what typically a lot of people think about when they talk about trading psychology, or the general view or the first thought when you say trading psychology is, a lot of people think about it as what you think about when you're in the trade, right? So what do you think about? What do you think about when you're in the trade? Let me just do this. Okay, so it's not so much of sitting there planning and thinking. I like to break up a trade into three parts. The before entry, as you know, I can't scribble on the mouse. Okay, before entry, and then there is when you have entered a trade, and then there is when you have exit. Okay, break it down into three parts. What everyone focuses on so much is when they've entered a trade. Typically, everyone thinks, okay, I have to control my emotions when I have a trade running. I have to control my greed, or I shouldn't be fearful, or I shouldn't be greedy when I'm in a trade. I should, take profit or have my stop loss all there. That is one part. That's one out of the three. Okay. Why I say that is, let me just take that first part out. Okay, so it's before, and that's entry, and then there is exit. So before, trading psychology before you enter a trade is that FOMO, right? Is that FOMO factor. Anyone knows what's FOMO? Or anyone doesn't know what's FOMO? Right? FOMO, fear of missing out. Fear of missing out, right? That's so F, fear of missing out. What happens? Like what we've just seen on the dollar strength just an hour before this session, dollar shot up, right? The dollar index strengthened massively. When I last saw it, the Aussie dollar, the Kiwi dollar has dropped by about 70 over pips towards the downside. What a lot of people will be doing at that point, if you're not clear about your approach to the markets, you would jump in. You'd say, oh, wait, it's dropping, let me jump in, right? You're fearing that you're going to miss that trade. You jump into a trade, and what happens? Typically, whenever you see a trade drop this way, what happens next? At that point, does it continue down, or does it do a bounce back up again? Option 1 or option 2? 2, right? Fabio says 2. Henny says pull back. Yeah. So that FOMO factor, right? It does bounce back up, and that always happens with that big drop. You see that bounce back up, and that catches everyone with that FOMO factor, that fear of missing out, they rush into a trade. The psychology of fear of missing out, you rush in, you sell there, next moment it bounces back up, it hits your stop loss, and you go, oh, just lost money almost immediately. And what happens right after it hits your stop loss? What happens right after it hits your stop loss? It goes back down again, right? It goes back down again, and you go, oh, it's going back down again. What do? Sell again. Next moment, it goes back up. It hits your stop loss again, right? So when you rush into a trade because of the fear of missing out, what happens? You hit your stop loss over and over again. Then comes that situation where you're trying to revenge trade, right? You keep rushing into a trade, you keep rushing in, thinking it's going to continue, and then the next time it goes down, right? It hit, you enter again, it bounces back up, hit your stop loss, and then the next moment it goes all the way back up again. I'm not saying that this will happen on the markets right now. I'm not looking at the charts, but typically this happens to a lot of traders. They sell one time, it hits your stop loss. They sell again, it hits their stop loss, and then after that it shoots all the way back up. Okay, so first thing, right? Trading psychology. It's about before you enter a trade. I always have, for myself, I have a 5 questions that I ask myself before I enter every trade. And those 5 questions, I actually have a pen and a paper. I write it down. I write the answer down before I enter a trade. It takes that emotion out of it. All right, it takes the emotion. It keeps it a very logical process. I have 5 steps I have to answer before I jump into a trade. I do it all the time. I have paper piled over my table all the time. I clear it out every time. I write it down to enter a trade, just so that it gives me the extra couple of seconds or couple of a minute to think about things before I rush into a trade. Okay, so very important. It's not just when you enter a trade. Before you enter a trade, make sure you're not rushing in. Then, when you've entered a trade, those 5 steps, are they confirmations you have set yourself? Yeah. There are steps and thought processes, like questions that I ask myself before every trade. There's 5 questions that I've developed by myself, and then I've used it for the last almost 10 years already now. Okay, so after you've entered a trade, now you have the trade running. If your trade running, you're gonna start thinking about when to close out, right? When are you not being too greedy? Have your take profit set, have your stop loss set, not moving stop loss levels, not moving take profit levels, trying to hold on to that trade. All right, I always like to secure my profits, so as soon as I can, I'll move the stop loss to break even, secure the trade, and then I'll let it run. Okay, will I be sharing the 5 questions? Hey, if you guys are asking, I will. I wasn't planning to, but I will. There is a little bit more details to that. I don't think I'll get through the details of 5 questions, but I'll share that with you towards the end of the session. All right, I promise I'll do that. And then the last part, exit, right? What happens after you've closed out the trade? All right, I normally would say put a hand up if you have done this before, but put it into the chat. All right, after you've exited a trade, how many of you would have actually said, oh man, if I didn't close out the trade, it would have made an extra however many pips? Have you done that before? Hey, at least you're honest there, Anderson. Right? Good. Everyone is very honest. Okay. I don't even think about that. When I close out a trade, right? When I close out a trade, I'll just forget about it. Because once you've closed out a trade, thinking about what happens after that is just going to mess with your next trade. It's just going to mess with your next trade, because you're going to start thinking, oh, just that trade previously I closed out at 60 pips, could have gone to 70. The next trade, I'm going to hold on to it for 70. But you know that the next trade is not always going to move the same as the previous trade, right? Every trade is individual. Every trade, you're entering based on one reason, you're exiting based on another reason, right? So what I would suggest is Once you close out a trade, turn the page, it's done. Look for the next trade. Don't be fussed about whether you've closed out and if moved up higher or not, or whether it's retraced back down. Because what happens is when you close out a trade and it retraces, and you go, oh look, that was a perfect trade. It hit my take profit, and then it retraced back down. What's going to happen on the next trade is you're going to think that my take profit is perfect. You're going to hold on to your trade until it hits your take profit, and then what happens? Climbs very close to your take profit, doesn't hit, and retraces straight back down again. Okay, so don't think about what happens after that. Flip the page, move on, look for the next trade, brand new, almost like a brand new start again. Okay. Today not so much. Always thinking exactly better. Think about next trade to forget the rest. Yes, correct, Georgie. Do you avoid looking at that pair after closing? I don't actually avoid looking at that pair after closing. I do, because especially if the momentum is strong, it's still moving in a good direction. I will still continue looking at that pair. I do actually look at, I'll use this here. My screen is pretty much like that, right? I have 8 pairs like that. So I look at 8 pairs all the time. So once I enter the trade, I'll still be watching it. I'll be looking across all the other pairs to see if there's any pair or any price movement that was lagging a little bit behind. Maybe it'll continue moving in that direction. Okay. Hey Rojan, yeah, hey Fabio, I love that news reading vertical screen as well. Okay, I used to think about that, but no more after I read Mark Douglas' book. Oh, I'll check that out, Bob. I'll check that book out. More fixed for me. Every trade is unique, correct, good. Is trading only one pair help to develop emotions? Okay, Rojan, I wouldn't say that you should only look at one pair, right? The risk of only looking at one pair is that, let's say that pair doesn't move at all. That pair for that day, for whatever reason, didn't move, and then you see other pairs, you might see other pairs moving. You think that you're going to force a trade on that pair, thinking that it would start moving, right? Thinking that it would start moving. So I wouldn't limit to one. I would say that for most retail traders, because of the time that you have or the energy and attention that you would have, I would say about 4 to 6 would be reasonable. 4 to 6 pairs, try and look at it in that format here would be reasonable. Yeah, so 4 to 6. I tend to do it at 8, sometimes 12, but 8 would be most comfortable, especially for a screen size. Okay, do you have a limit of trades per day, like 2 or 3? I don't actually have a limit on number of trades, just because on some days, everything's moving. Right? On some days, we have a lot of news. We have the FOMC, we have the ECB, the Bank of England, we have the Swiss franc, all moving. So I wouldn't limit myself to 2 or 3 as a hard stop. I would say that, on average, based on my last years and all the previous years, I found that I do have about a 2 to 3 trade a day average, but there are some days where it's 0 and some days where it's 5 or even 10 trades. But bear in mind, I am looking at the charts pretty much from 9 a.m. to almost 2 or 3 a.m. every day. Okay, so I do spend a lot more time in front of the screen. So I do tend to catch some trades more quickly, and possibly more trades when the market is moving. If it doesn't move or it doesn't trend the way I analyze the trade, I normally get out. Fantastic, Simon, right? Especially if it doesn't move. When you enter a trade, it doesn't move, get out. Close it out, whether it's a small profit or a small loss, close it out, reevaluate. Okay, reevaluate. Look for something else. So why is trading psychology so important? Why is trading psychology so important? It keeps you from smashing through that screen. It keeps you from smashing through that screen. I can tell you that there are days where the market is choppy, right? Just rewind it back 1 year ago, at this time, or actually slightly later on from January, I think mid-Jan to Feb, we were looking at the Russian invasion of Ukraine, and prices were choppy, right? Euro dollar would shoot up one moment, crash back down the next. And we're talking about 15-minute time frames, right? It shoot up in 15 minutes, it smash it down in the next 15, and then back up again. If you were trading at that point, trying to catch every move on the upward move or every move towards the downside, you would get caught out endlessly, and then you end up looking to smash through that screen, or like Adrian says, smash through your account balance too. All right. I was trading during that time. I was trying to scalp it. So many times I've thought about chucking my mouse against the wall, but I did follow my rules, kept to it, kept on with the mindset, psychology in it, right, and then kept on through the whole process. And like Pedro says, yes, trading in the zone is, I think Bob was mentioning that as well, right? Trading in the Zone by Mark Douglas is a fantastic book to catch up on. Let me scroll back down. Okay, it is a fantastic book to catch up on. It does get you thinking about the discipline, how to maintain that attitude. All right, our mind test us after several stop loss in a C. Cool. Hey, now that Fabio has brought it up, what should you do if you've done, let's say you've entered, I've got no space, so I'll draw over this picture. If you've done a stop loss one time, and then your next trade, you've done a stop loss again, and then your next trade, what should you do on the third trade? So first trade, stop loss. Second trade, stop loss. What should you do on the third trade, or before the third trade? If you have a series, we're not even talking about a series of stop losses. We're talking about 2 stop losses in a row. Lucas says stop trading for the day. Anyone else? There are actually, let me think, possibly 2 or 3 things that you should be looking at. So 2 or 3 things that you should be thinking about doing on the before you enter the third trade. Okay. Yes. Good. So one is to reevaluate. I'm not going to try and write that down. Reevaluate, right, and make sure that your next trade you're sticking to your strategy, right? I would like to say, make sure that you write it down. Make sure that you have a clear proof that you're sticking to the strategy. All right. Second thing is size down. Definitely size down, because if not, you're going to very quickly swing into that whole revenge trading mindset. And then the third thing you can do is reach out, have a chat, right? We've got a great platform there to chat, to get some insights, to get some feedback. Reach out, message me, drop a message to anyone. Just go, hey, what's happening in the markets? What's happening? This is the trade I've done. Is it a strategy or is it a market conditions? Right? You don't have to trade alone, right? You don't have to trade alone. You can always reach out, get some review, get some feedback. 3 things to do if you've hit a series of losses. But how sometimes the DXY and the gold are not correlated. Sultan, they are, DXY and gold are they are correlated, not perfectly correlated, right? It's not perfectly correlated. At times there is a slight delay, and also you have to see why is gold strengthening or weakening, right? It could be that fear of recession, the recessionary fear globally, could be a move towards reserve, or that could cause gold to strengthen, right? Both did go up. Actually, dollar actually shot up, gapped up, and then after that retraced back down, but gold continued pushing back up. continue pushing up again. Okay, so not perfectly correlated. Consider the reasons why it's pushing in a direction, and also the pre-existing trend, right? The pre-existing trend. For gold, I can't remember what the price is right now, but for gold to retrace back down, it dollar needs to strengthen significantly before we're going to see gold strengthen back down again, or weaken back down again. I actually think that gold potentially could have some further upside. All right, let me just look at the questions. I might have missed out on some. What's the best website to see fundamental analysis as a retail trader? Sarbit, check out Forex Factory. Check out Forex Factory for fundamental news. Analysis, you can always check out you can always check out Forex Factory as well. I do share a lot of fundamental analysis on my TradingView as well, so you can check that out as well. If it doesn't move or doesn't, okay, got that. Stop loss, stop trading for day, yep. What's the ideal stop loss number of pips? Hey, Matthew, it's hard to tell you what the stop loss number of pips would be. I would say, not more than 2% of your account, right? Not more than 2%. In fact, I would say 1% would be a good, reasonable number, because most often you're not going to have one trade at a time, right? I don't think that a lot of you have one trade at a time. You might be looking at two trades, so you don't want to have two bad trades and you lost 4 to 5%. So I would say 1% stop loss. In worst case, you have two trades open, you hit both trades on a stop loss, you have lost 2%. So no fixed number of pips, but I would say consider the sorry about that. I would say consider the percentage risk of your account. Okay, if you're following the strategy trade again, good, reduce size, done that. I'm just checking all the, okay. Pedro, drop me a message on TradingView. I think that would be a lot better. I do have Twitter, but I don't check it that much. I don't check Twitter that much. All right. Fantastic. Do I recommend this book? I do recommend this book. In fact, I would also recommend if you check out the Playbook. I love that book, the Playbook. You can check that one out as well. What pair do you suggest to pair that is less manipulation? Hey, I wouldn't say that the pairs are very manipulated. I think that markets are relatively fair. So who's the playbook? I don't remember actually. Let me just do a quick check. So I wouldn't say that any pair is particularly manipulated. I would say that, oh, actually I do know playbook. The playbook by Mike Bellafiore. All right, playbook by Mike Bellafiore, the SMB Capital guys. Right, so Rimun, I would say that if you're looking at if you had to choose a pair, pound, maybe euro, the Aussie dollar, Kiwi dollar, the yen pairs would be a good start. And I think pound dollar, a lot more volatile at this point, would be a good place to trade as well. Some brokers manipulate the charts. I had a bad experience before I joined IC markets. I'm not going to get into that. I'm not going to get into what I would suggest. If you guys are on IC markets, the best place to be at. So no worries there. You could also have multiple MT4 open just to check the prices, check the charts, just to make sure that you're happy with the pricing. You got it there, Georgie. It is. All right. So with that, what were we talking about? We digressed. Why is trading psychology so important? It prevents you from smashing through that screen and smashing through that screen and your accounts. I would say Playbook by Mike Bellafiore. Trading the Zone by Mark Douglas, great books to read and to check out. I'm actually working very slowly on a psychology book as well. I think that there are too many books out there in terms of trading strategy and mechanics of trading. I think that there's not enough books in terms of trading psychology. So I'm working on something there as well. Highly important topic. Okay, so revenge trading and how to overcome it. What's happening here? Okay, traders after revenge trading. I can tell you that there is there's almost no way to completely avoid revenge trading, right? There is, if a person tells me that they have never or they will never revenge trade, I would say that it's almost impossible, because every trade is never going to be zero emotions. It's never going to be zero emotions. Okay, there will be situations where you have less emotions, never zero. Okay, never zero. How do you stop revenge trading? Don't do this. Right, there are times where I think you guys have said it into the chat as well. At some point, close out, walk away, go for a walk, drop me a message, drop someone a message, have a chat. Don't look at the screen. Right, take away the emotions. It's not take away, but reduce the emotion. Stop looking at the charts so much. Matthew, what happened to the pound dollar? It was the strength of the US dollar that caused the pound, the euro, the Aussie, the Kiwi, everything to drop. Fabio, yep, it is good to meditate as well. I I wouldn't I do, but I end up getting a bit too distracted. Okay. So how do you reduce revenge trading? Walk away from the charts. All right. I find that a good way is also that you would have a punch card, right? One of the methods that I used to um, guide traders previously is that you would have a piece of paper, right? And then you would have only 3 rows available. So think about it, you can only enter 3 trades a day. Would you get into a trade on, so you have the first one there, would I get into a trade? Then you say why you get into a trade. Done. You have your results there. Did you make money? Did you lose money? And then you go to your second trade, and then you have your third trade. When you think about only limiting yourself down to 1, 2, 3 trades, you become a lot more selective. You're not going to sit there and go, oh, it's moving, I'm going to jump into a trade, I'm going to try and take 1 pip, 2 pips, and get out. You're not going to try and revenge trade too much. Okay, so but this all requires you to sit there and have that system, um, and keep to it. Okay, 3 trades in 24 hours or per session. I would say in a session, in a 24-hour session. Okay, um, why I say that is because some of you might go, oh wait, I got a 3-hour session here and a 3-hour session 1 hour later, or 3-hour session 30 minutes later. You 9 trades in a whole day, right? So you don't have to keep to 3, right? Find what's your average number and stick and have a punch card, right? I think if you search a punch card trading, it is that benchmark where you have a fixed number of trades. You end up is to make you become more selective in how you actually enter a trade before you start entering a trade based on FOMO or based on greed or based on emotions. This becomes a very logical process. I've been trading for 4 years, and the last year my best results have come trading commodities only, gold and oil. I have an experience with this market as well with Forex. Any book content to follow or study? Thank you for your time and coverage. Pedro, I would say that I treat gold, oil, and forex very similarly. The only difference, and you guys know I focus a lot on fundamentals, the only difference I will consider is the news impact onto gold or onto oil. Right? So the oil would definitely be the OPEC, who especially last year was the Russian war, the OPEC cut in production levels, the price peg, not really a peg, the price restrictions on Russian oil, the news events that could limit the prices. Yeah, so I would, in terms of price movements, price action, and how it looks on the chart, I'll treat it entirely the same. I would see what's causing that overall bias and the overall move. Okay, so how do you limit yourself in terms of um, revenge trading? Walk away, message someone, go have a chat, message someone, have a chat. And I would say that I like this system where you have a bit of a punch card system. Limit your number of trades. You limit your number of trades. Is it okay to focus only on one pair? I answered just that question just recently. I would say that it's very dangerous to limit yourself on one pair, because as it moves, as everything else moves, you might be tempted to try and force a trade. So I wouldn't limit on one pair. So I would say, 4 pairs should be a reasonable amount for everyone to monitor and to pay attention to. All right. Okay. So as promised, I'll tell you um, my 5 steps before I enter every trade. You ready? 1, 2, 3, 4, 5. Okay. So this is my own checklist. I can tell you that there are a lot of there are a lot more. It's very simple, but there are a lot more details into every step. Again, unfortunately, I can't get through that this session, but I can always share with you more later through, if you reach out to me and let me know. Okay, so first one is news, the fundamentals. Okay, is the news or the previous news? Okay, let's just say it's the previous news. Is it causing price, or is it likely to cause price to move towards the upside or towards the downside? What was the previous news? Is it likely to cause price to move towards upside or downside? Then I look at trend. Right? What was the previous trend? Was it moving up? Was it moving down? Or was it moving across? Okay. And then I have my support resistance. Okay. In terms of support resistance, I would say that is it breaking through a resistance level, or is it breaking through a support level? Is it bouncing off a support level or bouncing off a resistance level? Or is it moving towards a support or moving towards a resistance? Okay. And then after that, I have my indicators, or you can say price action, or any other tools that you use. Okay, in this case, for me, I use my MACD. I have my own custom MACD that I use. You can use your Fibonacci as well. You can use whichever indicator, just to give you that little bit more of a confirmation. And then lastly is my risk to reward. Okay, is it positive? Is it a negative risk to reward? Is it a positive risk to reward? Is it worth taking that trade? So this is how every trade I get into, or before every trade I get into, first off, I'll look into it and go, okay, previous news was pushing up. I'll point up or circle up. Previous trend was up, great. It's breaking through a resistance. I have everything pointing towards the upside. I'm looking to buy. Or if it's pointing in a different directions, then I'll be sitting out, because I don't have that confluence of analysis to give me that confidence to enter a trade. Okay, so this is what I do. 5 steps, 1, 2, 3, 4, 5, leads to deciding whether to buy, sell, or wait. I know I'm drawing right at the corner there. I hope it's still easy to see for you guys. Okay, make sense? Time frame is any time frame, that and I'm looking at 4 hours, 1 hour, 15 minutes, 1 minute. It's all there. It doesn't have to be all positive or all in the same direction. The level of importance, apart from the risk to reward, goes down this way. So this is most important at number one, and then number four is the least important. This risk reward is of course the most important. All right. What's the MACD setting? It's not so much about the setting. I did a recalculation of the math to recustomize the MACD. Good stuff, Simon. Good stuff. All right. Okay, so I hope this helps you guys. I hope this, you don't have to follow these steps. You can always have your own 5 steps, right? So that was the next thing I was going to get to, or the second last thing I was going to get to with you guys, is that you don't have to follow those 5 steps. It can be your own, right? But I want you, let me just get to that point, trading plan, right? I want you to come to a point where you have a fixed plan, right? Something that you can draw it up, right? Whether it's a 1 to 5 steps, or whether it's even just 2 steps or 3 steps, however many steps it is, have something that you can draw it out, write it out, and it's logical. Because the trick is that if you have your steps here, right? Let's say it's 1, 2, 3, 4, 5, 6. You've gone through 6 steps, and then it tells you to buy. You know that this is not an emotional trade because you've answered 6 questions before you enter that trade. You know it's not emotion. You know it's less of an emotional trade, and if it makes money, great. Steps work, fantastic. If it doesn't make money, at least you're not going to be blaming yourself, thinking that, hey, it was emotional, or it was because of this or that, right? It's less of a psychological problem. There's loss of trade. If it does lose money, right, or bad trade, you know that you're not going to win all the trades. You build that probability of your trade. You come to the point where you know how often this is going to work. Okay, so it comes down to trusting that strategy, or trusting that system, keeping it logical, less emotional, right? And that's why this is very important. It's the process, right? The process of answering those questions before you enter a trade, so that you're not emotionally attached to the results. The results is only a product of this process. Yeah, it's not a single trade, a sequence of trades. And the only way you do a sequence and to have that consistent approach, right? The problem with if you think about a sequence of trades, you want to make sure that the process to that sequence of trades is standardized. You don't have a sequence of trades with different approaches, and then after that you're going to, you don't know which works and which doesn't work. So once you have a standardized approach, you're gonna have a standardized result. Yeah, right. Plan, process, habit. And the more you do it, the better the habit becomes. Okay, so keep calm and stick to the rules. Coming back to this, do you have a trading plan? Right? Everyone. I've asked this question so many times. Do you have a trading plan? Everyone goes, yes, I have a plan. I want to. Oops, no, not that. Okay. Do you have a daily target? And like I was just saying earlier on, right? It's very, very, extremely dangerous to have a trading target, a daily trading target. Very dangerous. A weekly trading target, dangerous. A monthly trading target, a bit less dangerous, but still not ideal. Because, like Rojan said, it depends on the market, right? It depends on the market. 100 pips a day. Can you imagine if someone, and I've heard this a lot of times, is that if someone comes and says, "Oh, I want to make 100 pips a day," but hey, if it was Christmas, how are you gonna make 100 pips a day, right? If it was Christmas, how are you gonna make 100 pips a day, or make 3% a day, right? 3% a day. Would that mean that one trade you're gonna make 3% a day, or you're gonna do it in three trades at a 1% each, right? So it's very unrealistic to try and fix a target, right? It's very unrealistic to set a target in terms of pips, in terms of percentage, in terms of a dollar value, because there are times where there are no trades, or there are times where you've traded, right, and you've hit 100 pips a day. Would you stop? Let's say the markets are moving ridiculously high volatility, a good liquidity, you know, and we've seen prices move like the pound dollar in September last year, where we saw it drop massively because of the tax cut fiasco. And you've hit 100 pips a day. Would you stop trading if you hit 100 pips a day? Put it into the chat. Let me know. And be honest now. No, right? Okay, right. I can tell you that a lot of people, not let's not say 100 pips. I know people who have said that they'll what was it? They said they had targets of 50 pips a day, right? They hit 50 and they went, oh wait, if I hit 50 in one trade, I'll continue on. All right, based on my punch card, I got 3 trades, so I can still continue on with another 2 trades. And what usually happens after the 2 trades? When in that 2 trades, they think that, oh, it's trending, they continue entering a trade and they've lost 50 pips on the last 2 trades. Okay, so not realistic to have a target. I would say it's more realistic to set a target that you're going to write every trade down, journal every trade, not after it's happened, but journal every trade before you get into it. Write down why you're entering a trade, where you're entering, stop loss levels, take profit levels, the reason why you're entering a trade, then you put it in, then you get into that trade. Right? Targets does kill accounts because you're pushing towards that target even when there are times where there's no volatility. I don't have a target, but I do in fact have some similar to what you have, steps I follow, then work on the target for that pair trading. Yep, close, Anderson. I would say that stick to the process. All right, very often is as you stick to that process, it gets you to that target. Okay. Never repair on how many pips I've made. Yeah, limits the market opportunity. I set a target before. Unfortunately, I realized that the market can give more than my target. So the thing is that's again a review, right? I wouldn't worry so. For me, I don't worry so much about what happens after I close out a trade. Uh, Even if the market does move more than my target or more than my when I close out a trade, so be it. There's always tomorrow. There's always tomorrow. We're starting the year brand new right now. You've got a lot of trading days ahead of you. Think about it, long-term trading journey, right? Don't rush to try and make all that percentages in the first 2 days or the first month. All right. Do you know any downloadable journals on Excel? I don't, Sultan. I do all my journaling on a piece of paper, just because screen space is so important already. So I don't even have an Excel spreadsheet open to type it up. It's just easier for me to scribble stuff down. Okay. Win rate, RR, and risk per trade are the important. It is. All right. So as you go through these processes, you get to understand win rate, because you've gone through multiple trades. You need multiple trades to know what your win rate is. Then you see the RR, and then risk per trade. Problem is that it's more at finish the day negative. Fabio, I would say that um, then you might want to reduce down the number of trades. There has been periods where I've seen, even for myself, sometimes I enter one, two, three good trades, and then the fourth one I try and get a little bit greedy, and then I end up losing that trade. Right? So maybe follow that process. What happens at that point is because sometimes you think that the trend is going to follow on, and then after that you get caught out with that retracement. Okay. Any further questions? I don't actually have 20 minutes to ask anything. I only have about 5 minutes. So any further questions? I do hope that I've shared with you the 5 steps. You don't have to use the 5 steps, but you can always develop your own steps, your own approach to the markets. But make sure you have a consistent approach to make sure that you have a consistent profitability and consistent trading style as well. Okay, Adrian, you can reach out to me on the platform. You can reach out to me on TradingView. You can search, Google me, and you can find me there as well. All right. You're most welcome there, Simon. What do you think about the fake breakouts? We'll talk about fake breakouts. We'll talk about strategies the next time round. But fake breakouts, not so much a problem if you have reasonable support resistance levels. Sell gold. I'm not looking at the charts right now, so I couldn't even think about what to recommend to you. Okay, let me just do this here. Bring this up. You guys can also catch me here. Right, so you can reach out to me there. You can reach out to me on the IC Markets platform as well, or you can drop me a message here. I do a lot of analysis. I've just done some reviews of the year. I'll be looking at some projections coming up as well. Hey, if you guys had a good session, you found the session today useful, informative, going to help you with your trading, put it into the chat, let me know. I'll be more than appreciative for that. And also, if you need any questions, you can always reach out to me right there. With that, I will draw an end to the first webinar for the year. Kelvin needs help with the VIP link. You can reach out to me on the VIP channel as well. Kelvin, I'll drop you a message on the VIP link. I don't have it with me offhand at this point. No worries. So what was I saying? Okay, first webinar session for the year. I hope you trade well, trade safe. If you have any questions, please reach out, let me know. I'll be very happy to guide you through this year and also from here onwards with your trading journey. So for now, take care and I'll see you again. Bye-bye. Thanks, Kevin. Thanks, guys. Take care now.